Today in the crypto space, we're seeing some green price action throughout the market. Bitcoin right around 105,500, doing pretty good. Ethereum looking very, very green right now, right around 2,500, up approximately 6%, not doing bad whatsoever. The rest of the crypto space, the altcoins, some green gainers. We have Say still looking strong, Aptos, Phantom, Sonic, many projects right now doing really, really good. In today's video, I want to talk about the general market. I want to use Bitcoin as a leading indicator, but more importantly, I want to talk about one project that could be looking good in upcoming days, and that project is called Raydium. So you know what? Let's talk about the news, let's analyze the charts, and let's strategize to capitalize. Welcome to the channel. My name is Mike, and let's get right into it, guys. If you're new to the channel, welcome. On the channel, we talk about cryptocurrency, Bitcoin, Ethereum, and all the altcoins. Looking for opportunity, whether we go up or down, bearish or bullish, it doesn't matter. All we want to do is stay one step ahead of the market so that we can capitalize on any of the volatility. And if you appreciate the strategy, subscribe to the channel, click the bell so you don't miss out on any of my future videos, including the live streams at 8 p.m. EST, where we talk about crypto news and price action. Guys, if you have any projects you want me to cover on the channel, feel free to let me know in the comment section below. You can hit me up on the socials. The links are in the description. Better yet, guys, join the Discord. The Discord is where it's at. Lots of good alpha, trade setups, fundamentals, and learning material. The best part is, it's absolutely free. All right, guys, let's begin. Let's see what's going on here with the general market, because right now we're seeing a lot of green. Of course, the market is looking good. We see Bitcoin doing pretty good. We see the total market cap rising to previous highs, right around $3.4 trillion, which is great. We need a continuation to the upside. However, what's more important for me to see is a continuation in the trading volume. We need active participation in this market in order to continue showing the volume that we need. Right? We need that volume. We need that strength. We need that market to be active and with lots of new activity, meaning that if we see market cap rise, it means that fresh capital is entering this space. And that is what we need for a healthy run to the upside. Okay, guys? So we're going to be taking a look at this right here for the next little while, of course. Keep an eye on it like we always do. And the general market, of course, as long as we see the market, the total market cap rise, what you have to ask yourself is, where is that capital going to be distributed? How many of these projects are going to be attracting the majority of that capital? And of course, a lot of the times we focus on the large caps, and for the most part right now, that is probably the safest thing, to expect that the larger cap altcoin projects, the L1s, start to show a bit of strength first. Then from there, we could see ecosystem growth or ecosystem attract capital. But before we get into the ecosystems, usually it's the DeFi plays, it's the DEXs, and it's all the DeFi, maybe the lending and the borrowing, the ability to stake and earn and these types of things. It's DeFi. Usually it's the DEXs, guys. The DEXs usually attract a lot of capital when we start to see, volume, right? On-chain transactions increase, therefore DEXs do well. And if the L1 is going to get on-chain transactions because of volume, because of market participation, we should see the DEX do well. So what I'm going to do today is talk about the main Solana DEX, right? The main Solana DEX mean Raydium, Solana in general has been taking a little bit hit, and it's not just Solana. A lot of the market has been rolling over, but particularly Solana, given the fact that it's a big narrative. Its biggest narrative was the meme coins, and since then meme coins have simmered down. They're still active, they're still there, but the meme coins have simmered down in the last little while, which is healthy for this market. Okay, pumped on fun is slowly transitioning and phasing out, which is important for Solana to diversify its product offerings, and for ultimately for Solana to be identified as something else other than just meme coins. It needs to have some good fundamentals, some utility projects, and ultimately it would give Solana that sense that it is a valid project or valid L1. We know that Solana is a decent L1, and ultimately it deserves to have some diversification. And with that being said, I still feel like Solana and many other L1s out there, right, are still super undervalued, right? I think Solana is slightly more undervalued given the hit that it took with the meme coin narrative, of course. And then that's why I'm saying, like, ultimately, if we start to see Solana recuperate and we see even other L1s, we'll talk about a lot of these DeFi plays on various L1s in the next little while, guys. So don't worry. But I'm focusing on Solana for today. And that's, directly the reason why Raydium should be on a watch list. Because if Raydium starts to show strength here, guys, it could be a good opportunity to start to see. It's very similar to the point where we see Ethereum do well, and then we see Uniswap do well, and all the DeFi, wake up on Ethereum based on Ethereum's activity. And that's basically the thesis that I want to apply to other L1s that right now are competing for the top spot. Okay, so enough about that. Let's get right into the top 100, and then we'll talk about Bitcoin. We'll use Bitcoin Quick as a leading indicator, and then we'll talk about Raydium Ray. So as you can see, the general market right now is doing pretty good based on the strength that we've been getting. XRP is doing pretty good, up 7%, and you can see a few gainers here. I would say the average is about 5 to 10%. Chainlink right now is doing amazing, up 10%, which is great, and we have HBAR doing pretty good. So I would say, about 5 to 10% on average. Aave, DeFi. Aptos right now is killing it, 20%. If you got in APT, guys, we missed out on that one. I missed out on that one. I have a bit of a spot bag, but nothing major. I would have loved to rotate out of my Say position and buy some Aptos. That would have been great because Say did a very great job already. I'm not saying that it can't continue, and we happen to time it pretty accurately, that entry. But ultimately, guys, when a project does very, very well for a sustainable amount of time, it's time to expect that it becomes riskier to hold that position, and it's better to find better risk to reward ratio opportunities. And Aptos right now it left the station. It's up 20% today. It made a higher high. It did change the structure a little bit, and at the end of the day, maybe it's starting to become risky as well. And this is the thing where you got to be willing to just move on and find the next one, and don't try to run on top or jump on moving trains, right? You got to kind of stay one step ahead type of thing, because you don't want to become exit liquidity even on the shorter term time frames, right? We have Near Protocol doing pretty good, and we have many others. 10% for Ondo, that's a nice bounce, and a few others. Let's keep on going down. We got Render finally waking up a little bit. ARB is doing great, 12%. Say is still on a tear. It's up 65% in 7 days, guys. That's a great gainer, right? That's an amazing performance. So after a performance like this, I start to hesitate. I start to think risk, right? Now, spot bags, if you want to hold them, sure, hold them. If it dips, endure the dip, take it on the chin. However, if you're in some heavy leverage, or if you're overexposed, your bags are too big and you feel like you need to diversify or rotate or take profit, guys, I'm telling you right now, there's nothing wrong with taking a bit of profits on a project that's up 65% in a week. Okay, that's not bad whatsoever. And of course, if it was a full-blown alt season, I would say, yeah, hold it, because the likelihood it's going to continue eventually. But this is not what we're seeing right at the current moment. Like, we know the market conditions are not really in an altcoin season at all. So the reality is that the probability is that this is a random anomaly, and in fact, it's an imbalance. And in fact, it could come down with the rest of the market if we do get a retracement here. Okay, so right now, Say is on fire. Congratulations if you happen to get it early on that one. What else do we got here? If we could come down, we got Jupiter waking up a little bit, and we have Injective doing pretty good, 14%. That's a good gainer, and there's a few good gainers here. Stacks finally waking up, 6%. Now I'm gonna just try to neutralize a little bit, because this is so bullish. This is great, guys. However, we have to understand that, use Sonic, for example, or many others. The reality is they have a lot of work to do. They have a lot of work to do still. We can celebrate the 14.5% pump. Let's celebrate all pumps. Here on the channel, we celebrate them all. The problem is that if you look at the weekly time frame, you start look at what these projects have been doing, this a 15% rally right into a 1 day is nothing in comparison to what it needs to achieve to recuperate. It's just the beginning. So if you're on the sidelines looking at these and you're FOMOing, I'm telling you right now, yes, you might buy now, and you might, buy a little bit of a top, and it might retrace. But the grand scheme of things, if the market does decide to recuperate from, all the red and all the selling that has been happening the last year and maybe more, the reality is you're buying bottom still, guys. That's that's the perspective. Okay, so you got to look at the time frames. Yes, on the shorter time frames, it looks like you missed out. But big picture, guys, you missed out on nothing. A 15% bounce at where we are right now into this is nothing in comparison to what it needs to achieve in order to make people whole for the last 2 years, if you get what I mean. Okay, so it's either it's the beginning, or maybe you just, maybe we do come down and then we find opportunities to accumulate. Guys, at the end of the day, I'm bullish. It looks great. Things are looking good. And I want to take a look at Bitcoin, because Bitcoin is a great leading indicator. All right, guys, so let's take a look at Bitcoin. Let's see what's going on with Bitcoin, because ultimately, if Bitcoin shows strength, it's a good sign that the rest of the market is pretty safe. As you can see, Bitcoin is still within its retracement. It's still making this little retracement to the downside. It is still in a downtrend with regards to this retracement after a beautiful rally. What else do you expect? The thing is this retracement over? Let's take a look at this in a little bit more detail. I think the biggest issue is the impatience that we have. It is because this market has been testing us with time. Time has been the biggest issue for us here in this space. Yes, price affected. Yes, price volatility and the fact that, we see altcoins not really doing anything in the last while. But reality is we could still be in a bear market. And that just by me saying that statement, it just basically means that timing is against us. We shouldn't be in a bear market. Altcoins should have already be full-fledged in its season. We should have seen Bitcoin already in price discovery. The market shouldn't be in its current state, but, at the end of the day, we don't make the rules, guys, right? We don't make the rules. We just be prepared. We prepared for all possibilities, up or down, or even sideways, right? Because ultimately, at this current moment, we do see Bitcoin going sideways. It's within its range. It is in a downward sloping scenario. It did break lows. It did break structure. It did, in fact, make a lower low, change the direction of the trend. And we got to be honest about that, right? I know a lot of us could be a bit bullish right now, and I'm one of those, because ultimately this is still an uptrend. We did not break these bottoms right down here, right? So we got to understand that the big picture trend is still fully intact. But in the meantime, these retracements cause so much pain, because we try to catch the bottom. 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 And then little by little, we get wrecked. Emotionally, we get exhausted. Our portfolios get exhausted. And then bang, we start breaking highs and we start moving. The problem is that the pain that is endured down here usually leaves people limping and their portfolios limping. And that's what you got to do in the next little while, guys. Make sure that you remain fully intact and that your portfolio is ready to rock when it's time to see Bitcoin get into price discovery. Because when Bitcoin hits price discovery, that is when we're going to start to see the altcoins wake up. Because, again, Bitcoin in price discovery is very risky for Bitcoin. We have no price action looking left. We're in price discovery, guys. There's no real formal TA that helps you really, there's nothing really there. And all we just see is Bitcoin run and Bitcoin run. But in the meantime, we start to ask ourselves, is this retracement over? I hate to say it, guys, but there's no data, none whatsoever, suggesting that it is. Okay, so if we start looking at these bottoms right here, maybe a bit of divergence. Not even, guys, not even. I'm telling you, it's not even. We're stuck in the chop zone. If we see Bitcoin get oversold, I'll tell you this, it's likely we get to about 97 and between 92, because this is the next order block and this is where the liquidity zones are at. Okay, so I'm just telling you that if this momentum, this purple line continues to get oversold, that is the level that you want to be prepared for. That's where you want to have some dry powder ready to go to buy the dip. If you are accumulating right now, it's because maybe you don't have any. And I understand you want a bit of exposure, but just make sure you have capital reserved for those events. Now, could we hold the chop zone? Could we hold steady at the chop zone and get overbought again? Look at the bullish response that we've been getting the last 24 hours. It's been pretty good. The thing is this bullish response going to get overbought like we have done in the past and make a higher high? If it does, guys, that's a great sign. That means the bullish responses, in fact, are going to is a sign that it's stronger than the bearish responses. And then if we get a bearish response that makes a lower high, a higher low, that's awesome, because now we're seeing that the bears do not have enough strength to make lower lows. And then the next bullish response, you get my drift. right? You get my point. Bullish responses need to start outperforming bearish responses in order to neutralize or create a change of character in this slope to the downside that we see here in this retracement. That's the bottom line, guys. So a lot of us, I'm a very cautious trader. I'm not a very risk taker type of trader. There is risk in every trade that you take, guys. This market can be crazy, and we know that. However, this is why I wait for the perfect moments to DCA. Now, for me, it was all into here, and I'm done DCAing there. The only other levels is where I'm going to improve my average entry, and the only way to do that is to literally come down lower. If we do not come lower, guys, I'm happy to get into leverage. I'm happy to continue holding my spot bags and defending those, because adding margin might cost me if it comes down here, and I want to be prepared for that, and I want to buy the dip, and I want to accumulate. So I'm thinking strategically here for the last one more move that could capitulate individuals and then sweep and then bounce. And it doesn't have to happen. To be honest, tomorrow we could wake up and Bitcoin could be flying, and I will be happy with that. But then what happens to the altcoins? What happens to the altcoins? What happens to the L1s? What happens to DeFi? What happens to all of that? Let's take a look at what's going on here with Raydium. Raydium, at the end of the day, is a project that belongs to Solana. If you don't know what it is, it's a DeFi play. It is a DEX. It's a decentralized exchange where people could go and trade on chain, on the Solana chain. Now, Solana, in the last little while, to be honest, it hasn't been doing the greatest. I mean, with the last few months. But overall, big picture, the life of Solana, it's been one of the greater performers in this market. So you can't deny it. And fundamentally, okay, every project has its pros and cons. And I'm not going to say, I'm full on a Solana bull. But I'll tell you this. It's not bad of a project, and it could definitely decentralize a little more, and it could definitely improve its tech stack so it doesn't have any downtime. And to be honest, it's not like we have a lot of downtime recently, and we saw some other factors that we need to consider, like its narrative, the meme coins attached to Solana and Raydium, the pumped up fun Raydium scenario. That's not a good look, but we're slowly overcoming. So the reason why I'm talking about Raydium, because I think it's undervalued. I think that if Solana starts to show its true colors once again, as it has done many, many, many times when people think Solana's over, I think that right now might not be a bad time to slowly start to DCA. Because I look for undervalued opportunities, and I'm glad to hold these undervalued opportunities before they run. The last thing that you want to do is be trying to hunt the bottom and expect a pump the next day, similar to what happened to, let's say, Aptos or Say, because Say did very well, but at least we caught that bottom. But right here, this is where bottoms can get caught. This is where patience needs to play out. So let's take a look at this data a little bit. Let's get rid of the oscillators a bit. I just want to look at, market structure, because that's usually what I do. I'll tell you this. The last time we covered Solana, we were looking at this level, and the discussion was this: if we do not hold this level, we fall through the volume gap. And we did fall through the volume gap, and we had entertained the next liquidity zone down here where the last order block was, which is right into here, major supply and demand with the point of control, and we respected it. Almost fair enough. Like, you know what I mean? It's not down to precision, but it's definitely there, guys. We see that the reaction was there. We got that bounce, and now the question is it a dead cat bounce? For most of us looking at this chart, you're probably thinking, oh, double bottom. I don't look at it double bottom only. I look at it as a possible dead cat bounce. And what that means is another attempt to hunt liquidity, another attempt to come down and break bottoms and finally get into a scenario where real pain can get endured. Now, it doesn't have to happen. Like I said, it's all a game of probability. I do not have a crystal ball to tell you what's going to happen in the future, but I can tell you some possibilities, and we can apply some, percentages to those possibilities. I'm going to have to redo this because now things have changed. We have volume here that has changed the volume profile. This is still a weak spot, very clear right into here. We have that volume gap and imbalance that exists. And we also still have an imbalance below. And I'll show you where that goes. This imbalance right here is still very valid. And that means that we need to prepare and understand that if the price drops below around $2, we can snap to about 50 cents very easily, okay? Because of the volume gap, the imbalance below. Now, this is where the concept of the dead cat bounce comes in, because if this is a valid dead cat bounce, where we come in, we bounced, we get into another quick distribution where people take profit, we maintain below the 200 daily, Okay, that's not a good look. And then we start coming down again after the distribution, the sell-off, and we changed character. There's a beautiful change of character. We made lower lows and lower highs after making multiple higher highs and higher lows. Okay, now we're down here. Now the question is, do we hold these levels of support? So I'm going to reuse this green arrow right here because it's still very valid. It's still a very important zone. In fact, I would say, look, if you are on the sidelines looking for opportunity, the opportunity is now, because really the invalidation is close by. And I'm just going to quickly, in fact, before I move that, I just want to get rid of some of this artwork here and just shift this green over arrow back over. And then what I'm going to do is I'm going to just put another box, because this is what I usually do in preparation of a potential bounce here at an 886 retracement. Let's just quickly do a Fibonacci retracement to see exactly what kind of retracement we're talking about, more or less. I'm not looking for accuracy here whatsoever. We tagged the 886. We're now at the 786. So we did get a solid retracement into the discount zone, and it far exceeded even the golden pocket and broke below the point of control. So we're at a level where you know you're buying a discount. But the question is, do we make a lower low, not just for discounts, but for actual pain, and potentially come down to the 1.27 extension level, which is very confluent right around that 50-cent zone. Okay, that's what we really have to understand. Now, we also have to look at the possibilities, like if that does happen, what liquidity are we going to end up hunting? Now, I could bring it down a little bit further, to be honest, as you can see. If I include the whole range, the whole plethora of price action that we have looking left, I could bring this down a little lower. In fact, you know what? I would say that's not a bad idea, because the true value of this entire chart begins down here at about 30 cents. So that's the worry zone. That's the real issue. If we come down, we're going to hunt these stop losses. We're going to hunt liquidation points all into these bottoms. And as we come down, we're going to come down for that real liquidation level, which is here, right into here. So your real scenario is this. Are you willing to think that Raydium and the Solana narrative could hold up this horizontal level of support? And that's the thing. This is why I'm putting the yellow arrow there, because if you do, the stop loss and the setup looks like this, right? We start to DCA in the zone. I'm going to be loose about that for a second. Put the stop loss underneath here. The risk to reward ratio, you can be modest and say it's at previous highs. And if you can DCA and average your entry all between this yellow box, in fact, you might even say I might buy a little bit of the sweep of the low, because it could be like something like this, a quick sweep, and you could DCA in your average entry is right around here. Your risk to reward ratio is absolutely good. Even if it's right into here, it's absolutely good. You want your average entry to be right around, I would say, $2.75. That would be an okay entry. Obviously, as close as possible to invalidation. Why? Because if you get it closer, you can see your risk to reward ratio improve significantly, and look at the gains that you could make, right? Obviously, to the upside, you could double your money. Right? In doubling your money in a trade scenario is absolutely healthy. I would take my initial investment off the table in a heartbeat and rotate it into something else within the Solana narrative, if that's what you're interested in. Look into AI, look into other DeFi plays, look into, whatever it is that you're interested in. Go check real world assets, whatever they got. Go look, go shopping, and diversify, right, with that capital, and still maintain some exposure, but house money exposure. You could even get a little bit more strict about the risk reward, even your stop loss, because technically speaking, you can see that these wicks should be the last line in the sand. And as you kind of, DCA in this area, you start to play with your risk to reward, but you can see at the worst case, you're still 2-to-1, even if you get the worst entry ever. So what I would be saying is this: if you can get an entry within this yellow box before we roll to the upside, guys, it would be great. If we break down, stop yourself out. That's it. Take a small loss, take it on the chin, and stop yourself out. But the potential reward is there, and that's what I like best about it. So I'm going to be keeping an eye on it. I still feel that we need to drop to lower time frames. So let's do that. Let's get on the 6 hour. And the reason why I want to drop to lower time frames, because the entry is not here yet. As you can see, this price action is still making lower lows and lower highs. So let's just quickly discuss what I mean here. It's about market structure, of course. And I think what the best thing to do is you just use a couple of trend lines to visualize. I'm not a trend line trader. I don't like using trend lines because, especially diagonals, because, that is a very easy way to attract, retail liquidity. Lots of liquidity is attracted to these trend lines. It is the tool that most new traders use, and market makers love hunting trendline liquidity. So I'm not really interested in it, but I like visualizing. I use it for visuals. Okay, this is a falling wedge at the current moment. It looks pretty good, and as you can see, I'm not even being that strict with myself with the touches. Right into here. Okay, that's fine. Ultimately, what I want to see is something different. What I want to see is, again, back to that bullish response, bearish response, things that I talk about. We want to see momentum and volatility. So let's use some oscillators here. You can see that we are getting a bullish response. We did get the bullish response. I want to see the bearish response come down. I want to see the bearish response and see if it continues making a lower low. If it makes a lower low, you dodge the bullet. Great that you didn't go long, right? Because we're ready to see a bearish response. You can see the orange line is ready to come down. We see that the purple is in the bearish control zone and struggling to break above the chop zone, right? It came from oversold, but I'm going to tell you this. Once the purple line decides to leave the chop zone and get overbought, which is this side up here, guys, it's likely we're going to break out. Okay, so what would I do here if it was me? I'm not going to rush the entry. If I miss out, I miss out. All good. But I want a good entry. I would wait for the bearish response, look at the price action, how it behaves when it comes here, and then wait for the bullish response to begin. If it begins and we did not make a lower low, in fact, maybe we double bottomed or made a higher low here, that's great. That's be epic, because then on the next bullish response, we might break out to the upside and we would be able to catch the bottom on a scenario where the momentum is going overbought and the volatility is also going overbought, both going overbought in the same direction, and that usually leads to a nice impulsive move to the upside. And that is what I'm more interested in. Now, if you're one of those individuals that say, you know what, Mike, we're buying the bottom anyway, this is a good level, you know what, I'm buying the dip. Whatever it is, I'm DCAing all into this area. Sure, that's your thing. As long as you know your invalidation is at that thick yellow line at about $1.48, $1.50. If you're good with that, then I'm good with that, right? That's a decision you need to make, and it's about committing your capital. And only you know how much capital you could commit. I'm just trying to show you the risk to reward opportunities and how you can control your exposure to the asset, because it's all dependent on, again, how much capital you're willing to commit. We can see that the trend oscillator is still in the bearish control zone, and EMAs are facing up. It could get bullish here, and I really want to leave this as such, because this is the perfect mentality to have here, because as soon as we start breaking above these tops, we start to build a change of character. We want a higher high, and then confirmation low, higher low, and then start going to the upside. And that's where things start to look epic. A nice backtest confirmation is where I would be piling in heavy. I would get into a trade here, sure, with a nice stop loss underneath, because of course a double bottom, a higher low, and a confirmed higher high, a break above here, that would be epic. It's likely we impulse, get in your trade right around here, put the stop loss, and let's rock, right? Obviously. But if we do get a bearish response and we get down to the yellow zone, guys, that's where I also want to make sure that I start DCAing and accumulating, because that's where we got the horizontal support right in here. Again, that should act as support once again. Okay, that's the best risk to reward ratio opportunity. The best is not always, let's say, the only, right? The best is where your trade is going to be set up in such a way where your R&R is good, your risk to reward. But just because that's the case doesn't mean that we can't grab a beautiful signal right into here for a reversal and, smash a bit of a buy button right at that level. It doesn't have to be even a big one. It could just be a small one and just, get some exposure to the upside. So that's not bad. So I quickly want to just keep that here. And I want to get back onto the daily and look at the oscillator. And the reason why I'm worried and the reason why I would wait for that yellow box is because ultimately you can see the purple line did not get oversold. And this Uno reverse right here that we got that didn't get completely overbought shows weakness in the bulls. And the bears are coming down to oversold conditions. And if this purple line gets oversold, guys, we're going to fall a little lower. And that's where the opportunity is at. Okay, and that's about it. Like literally, that's all I'm looking at. I want to see a proper reversal here. We got a bit of bullish divergence right into here. You can see the expansions right there looking pretty good. Lower lows on the price actions, higher lows on the momentum. And as soon as we see these EMAs up and in the bullish control zone once again, after this retracement, guys, we can start getting bullish again. Because look, impulsive move straight up, retracement, impulsive move. Let's get back into the bullish control zone and get some major purple expansions to the upside, where we can see Raydium do well, and again led by Solana. That's basically what we want to see. So we're at a point where a lot of projects should be on our watch list, because as we see a bit of volatility here, it could be a great buy opportunity. Guys, we've been getting a lot of red in the last little while, especially on these altcoins, and it definitely presents opportunity to DCA. All right, guys, if I've offered you any value in this video, do the channel a massive favor. Slap the like button. It does really help out with the algorithm. If you want to follow me on the socials, the links are in the description. Better yet, guys, join the Discord. The Discord is where it's at. Lots of good alpha, trade setups, fundamentals, and learning material. The best part is it's absolutely free. Take care, guys. Have a good one, and don't forget, buy the dip.